Hi guys, welcome to our panel, The Path Ahead, Onboarding the Next Billion Users. I am Alyssa Tsai, I'm the founder and CEO of PANONY. We are the VC focused on early stage Web3 projects. And today we have Alessio, CEO and co-founder of HexTrust. HexTrust is a custodian services solution. And they have very brilliant list of institutional clients, and they also are co-founder of Clearpool, a lending and borrowing protocol. And we also have Pascal, CEO of Ledger. Obviously, everyone has a Ledger, so yeah, no further ado.
Let's ask the room. Raise your hand. Raise your hand if you have a Ledger. Well, that's not everyone. So for those
I think 80 looks like 80% of it.
For those who didn't raise your hand, you can go to our booth. There's a QR code, and you get 10% discount.
Nice. Cool.
Voilà. I've done my job.
And we also have Jaynti. He's a co-founder of Polygon, one of the most adopted layer 1 protocol, and one of the most traded token for sure. So yeah, without further ado, I think everyone knows who they are. So how about we start with what's new with you and your company? So just give us some alpha. Yeah.
Sure. Well, HexTrust, digital asset custodian. We started about 5 years ago, originally in Hong Kong. As of today, we have operations in Hong Kong, Singapore, Vietnam, Dubai, Milan, and Bahamas. And we have about 200 institutional clients and around $5 billion in assets under custody. We also started offering additional services late last year. So we have a trading arm, a financing arm, and we provide additional blockchain services such as staking, governance, etc.
Yeah, Pascal.
Cool. So hi, everyone. So what's new at Ledger is, first, we have reopened our Asian office here in Singapore, and Andrew is leading it. COVID, riots in Hong Kong, we have difficult years to maintain business in Asia, but we're very happy to be back, and TOKEN2049 is an amazing event, so happy to announce that we're back in business in Asia. And so come visit us at the booth, the team is there. What's new is Ledger, at Ledger we focus on two things, retail on one side, enterprise on the other. And really what's new is what continues to be new, and I'll tell you because most of people don't know, is now the platform is open. So what it means for you, if you have a business, is you can use Ledger as a security platform and build apps on top of it. We will make the security the best in the world. This is Ledger, and so you can focus on your app, you can focus on the user experience. If you want to check us out, it's easy, it's developers.ledger.com. So that's what's new.
Okay, JD.
So Polygon, scaling solution, many dApps, more users, TVL. So 2 updates on the business side. As you can see, Starbucks launched their loyalty program on Polygon. Instagram launched their NFTs. So people, influencers, Instagrammers can use mint NFTs on their application directly. And those are on Polygon. On the tech side, we are launching many things. We are, very soon, we have a ZK EVM, ZK rollup testnet coming up. We have Avail data availability solutions also coming up. And we have SuperNet going live very soon. So we are working with many dApps around the globe, institutions and everyone. So happy to work with them to scale blockchains to the next level. Yeah.
Thank you. Yeah, I think what our panelists have common in here is we are all trying to offer different type of tech solutions to help either individual or company scale. And I think one of the concerns that will come to either Web2 or Web3 projects or companies is that about the security. And we also have been seeing a lot of hack, not last few days, but every month we'll see a lot of hack is going on. And I know you both have different kind of solutions towards the security. So maybe you can, on different level, tell us a little bit about how do you solve the security concern from institutions and retail. Maybe we start with,
Alessio. We can start with institutions. I think So the security problem is something that was really already a problem at the beginning when the blockchain industry started to really develop. Companies like Ledger, ourselves, and other companies in the same in the space, we've been working to provide solutions that can allow institutions to actually come to the space in a safe environment. I think if we look at the space, what happened in the last 6-7 years, most of the problems related to security have actually been addressed. We addressed the problems related to the cryptography, the problems related to hot wallets, cold wallets, the problems related to kind of taking a private key and distributing it across different signing entities, et cetera, et cetera. So the first part of the security, I think, as of today, with all the certifications, with all the regulations that we have to comply with, security as a process, et cetera, is basically, I would say, being addressed. So we know how to tackle this problem. Now, as we move from the real use cases of blockchain, and that's what is actually happening, right? So we need to not just use blockchain to store Bitcoins for investment or speculation purposes, but we want millions of users, billions of users to use blockchain every day to play their own games, to own their own digital identity, et cetera, et cetera. So in that case, we need to move from just the safekeeping of the asset in a secure way, but to make the asset available for everyday users of the asset. And that is really a challenge because obviously we know that there's always a kind of trade-off between how secure the asset is stored and how available it is to use. But I think this is really what companies like ours are working on to make sure that we can make not only the assets safely secured in a device, but always ready to be used for all the different use cases that we're seeing kind of developing in the blockchain industry.
Mm-hmm. Yeah, maybe JD can start with the layer one part because it's the underlying infrastructure. Yeah, and then we can move to Pascal on the retail and institution side. Yeah.
Yeah. So we are very kind of put our money into the security of the protocol. So I think Mudit Gupta is very popular security advisor in the industry right now, and he's our chief security officer at Polygon, and he has created an ultimate team to lead the whole operations of the crypto and everything. And our bridge, for example, we have like $4 billion TVL on our bridge. We have staking contracts which have like 40% of the token supply are on those smart contracts. So for the security of our users are like very top priority for us in general. Even if, like, for example, we are launching ZK rollups very soon, it also be kind of help users directly to make their assets very secure. We are working with institutions as well. We are working with custodian systems as well, multiple custody like Fireblocks, and so yes. So kind of in general, like we see as a kind of different level security, at a different level. For example, users like wallets and everything. For example, we are working with Sequence wallet, which is like MPC based or account level, like smart contract based wallets. Something similar like on the user level, on the smart contract level, also the social security level. Like we have like many validators running the decentralized systems and everything. So obviously, like we are very careful where to put our kind of efforts. For example, like some people just start with from day one, they just make everything decentralized, even if their smart contract not upgradable. So we are very optimistic, like very seeing like okay, even if we write our code, we make sure that we put out there, we have big bounties on top of that. So all those things we kind of
I think it has to be very comprehensive because only one part go wrong, everything will just
exactly right.
go wrong.
Everything is connected, so one loose end and you can lose money. So yeah.
And what about Pascal?
Yeah, well, maybe to help with clarity, I think there is a common mistake that the industry keeps on doing, which is to call custody everything. So custody, when you think about custody, there are two things. On one side, you have financial institutions. There are financial institutions, they are or not regulated, but if you want to hold coins on behalf of someone, you become a custodian. And those financial institutions, of course, need technology because you have to put the coins somewhere. And the question is, who do you get the technology from? And then the second part of custody is custody technology. And so you have companies like Ledger or even the layer ones that are pure technology companies and don't do the custody. Ledger don't hold coins for anyone, anywhere in the world, etc. We power a custodian with technology so they can become custodian. And so this is a common mistake, actually. I have a lot of conversations with VCs, and they're like, oh, but Ledger, you are like Anchorage. We got nothing to do with Anchorage. Anchorage does a business that is very, very different from ours. They are a bank. They're a financial institution. Of course, they have technology. Have they developed their own technology? Yes. Will they develop their own technology for the next 10 years? Probably not. If you look at the world of custody outside of crypto, there are 5 major custodians in the world. It's a highly concentrated business. And so it is very likely that crypto will follow the same path. You have many custodians. Actually, you don't have so many custodians today in crypto, but let's say that you have some custodians today in crypto. There is a strong possibility that tomorrow there'll be less, there'll be a concentration, and it will probably follow the same rules of having 5 or 10 top actors to cover the world. So when we looked at this world of custody in the normal world, then the question is, if you have 5 actors, probably they do their own technology. I mean, what is so hard about building their own technology? So I give you a news, a fun fact, they don't build their own technology. They relied on technology partners. And they spend billions of dollars buying technology. Why? Because technology ever evolves, and so if you're a financial institution, you have so many problems to solve that you will need partners depending on the part of the technology stack that you need, or you need partners for many things. The same way that you hire lawyers. You don't have all your lawyers internally, you hire law firms. Well, and the same way they hire a law firm, you're going to hire a specialist to do your security, and so this is where Ledger comes in, not just Ledger, you have other technology companies in the space. Now, I finish just with one thing. The confusion in the space comes most of the time from technology companies that fail at selling technology, and suddenly they use the technology to build a financial institution. It has happened in the past with BitGo. This is sort of what's happening with Fireblocks, with Copper, etc., etc. Selling technology is very hard, and if you integrate the technology into a financial institution, it's much easier to go to market. It's much easier to sell. And so this is sort of what's happening. And so you see BitGo, Fireblocks, Copper, and it's a great strategy, by the way. I'm not being I'm not criticizing the strategy,
just
but
different solutions.
They start by presenting technology, or even Anchorage. Anchorage started as a technology company, and they were like, fuck it, we'll just build a custodian, and they become a financial institution. And so what I think is important in this market is that there should be a segregation of duty of companies that are doing technology, being specialists at what they do, and other companies being specialists at becoming financial institutions. You will see there will be a shade of gray in the next 5 years where people, where companies will build their own tech, be custodians, be financial institution. You're going to have guys like us that will focus on technology. But in 10 years, you're going to have a segregation of duty. Technology companies will do technology, financial institutions will be financial institutions.
Mm-hmm. Yeah, I think Ledger also is more like a retail-facing front. So you also hold a educational responsibility in getting the common users to understand how do they protect themselves. I think that's also an important role you guys play in the space. Yeah.
Yeah. And to that point, I think the industry needs technology standards. Mm-hmm. What works, what doesn't work, et cetera, and must be very careful with the new shiny objects when it comes to security. Yeah. MPC is very cool, but it's very new. MPC was hacked not too long ago, and it will be hacked again, et cetera. And security needs time to develop. I think the education piece is actually very important, but also standards are very important, because as the end user, what matters is the end user. When they're going to trust their coin with custodian A, custodian B, custodian C, and they have no idea how the tech is run, this is usually where the hacks happen, because everybody will claim technology superiority. Everybody will claim that they're as secure as, but in the end, it's not necessarily true.
Definitely. Alyssa, you try to...
maybe let me add a couple of points here that I think are important. So the first one, probably less important, is that it's true that you have a lot of financial institutions today that are also playing the technology provider role. But I think at this stage of development of the industry, where you have a technology that is evolving very quickly, And where you, if you want to be competitive as a financial institution, you have to be fast enough, or you have to be faster than the competition. Relying always on third-party providers can actually either make you not competitive with respect to your competition, or maybe not be as innovative as you would like to be. And I think that's kind of sometimes the push that financial institutions, as you rightly mentioned, have to develop things by themselves instead of versus what happens in the traditional industry, which is quite mature, and you want stable technology rather than very innovative technology. The second thing is, for traditional custodians, they do custody digital assets, because the assets in the traditional world are still digital, right? But the digital asset in traditional finance, they're kind of pure ledger entries. They don't do anything, right? They're just an entry of what that represents some kind of ownership or settlement, etc. In our world, it's a little bit different, because the asset is just not an asset. It's a piece of code, it's a smart contract, and it has certain financial functionalities, certain financial services functionalities embedded in the asset itself. Mm-hmm. So if you want to make this asset available to vote on a specific protocol, to be staked, to be lent out on a DeFi protocol, etc., you have to really be able to control the asset, right? To be able to sign generic transactions, etc. So the financial services that are on-chain, not just the normal financial centralized CeFi financial services, they're kind of at a level down closer to technology compared to the traditional financial services.
That's true. I mean, it doesn't change the point that I'm trying to make. You know, like, again, the market is one way today, will be very different tomorrow. I think, you know, it's not true that every company that does crypto finance will code directly on blockchains, will be experts in DeFi, etc. You know, the segregation of duty is how a company will scale in the future. But, you know, okay, I'll give you a fun fact. I'll tell you who is our toughest competitor in the market. So we have Ledger Enterprise selling to businesses. And so when we go present to clients, okay, it's the Nano S that is the toughest competitor of Ledger. Most financial institutions in the space keep their crypto on nanos. So this is the state of the market today. Nanos have not been designed to keep crypto for financial institutions. Ledger Enterprise was. But the market is still very young. So in this market, there is a lot of things that we call security theater, like it's fake security. People talk about security a lot, but they don't really do security. Security is typically, if you're going to run in any kind of technology, first, if you're a security company, and so if you want to do your own security, number one, you need to have an attack lab. Otherwise, you can't do security, because you need to be able to attack your own products. Every security company in the world has an attack lab. We have the biggest and best attack lab in the space. It's called the Dungeon. It's in Paris. We have 20 of the meanest hackers. Actually, if you don't believe me, you know, give me your website, and then I'll tell you how it's broken. You know, give me your, let me know where to attack, and we'll probably break everything that you present. And so if you're a security company, first you need to have an attack lab just to make sure that what you think is security is really security. And the second thing, once you've attacked yourself, you need to hire other attack labs to attack your own product. And so finally, you need to get certification. And so I'm not talking about SOC, because that's process. I'm talking about product and security certification. No one in the space has product and technology certification. It's very hard to get. It's delivered by people, and you know it takes very long. And so, oh, by the way, no one apart from Ledger, but and that's why it takes time. And investment into security, it's a huge investment. And so, financial institutions today, I mean, you know, maybe they have unlimited money, but if you have a good security technology for cheap, then you can focus your money on growing other parts of your business.
Yeah, I think other than security, I think if we are able to onboard like the next billion users, like massively, I would say Web3 to me is still like in the early and middle stage. We still have like a long way to go. Most companies still not touching Web3. Yep. I know a lot of them are considering, but they are somehow hesitant for multiple reasons. So maybe you can give us some insight on how do you play your part to help accelerate the Web2 companies to adopt Web3 to integrate? And maybe we can start from JD, because I know Polygon has a studio, and you also work with multiple like either Web2 or like emerging like a Web3 startup. Yeah.
Yeah. So for Web2 companies, is still they are taking the custody of the people's users' asset and creating the, for example, NFTs or trading. Robinhood just recently started doing non-custodial trading platform on their app. So there is one major move by Web2 companies who started with a non-custodial product for their users. So I think currently what is happening is that all the Web2 companies are figuring out how they could integrate Web3 ecosystem directly into the platform. And for example, some people are doing custodial way. For example, Starbucks, Meta, what they are trying to do is that give our users something on the Web3 level, and if it picks up, we can do much more thing on top of that. And Robinhood did the same. Their crypto market was like very, very successful in the past, so they started in the second stage, they started doing the non-custodial trading on Polygon. So now, like as a Polygon user or Robinhood user, you can trade your cryptos on chain on Polygon without fees. So that will bring like millions of users, by the way. Like it is not a small thing. Like if you consider like the number of users in Web3 totally, like in total, like it's very, very less compared to any app in Web2 companies, right? And this Web2, the move Robinhood did was phenomenal. Like many people will just start using trading crypto on chain. What I see is that in the future, like all the like majority of Web2 companies start doing the similar thing. Twitter, I think, doing something similar where you can generate your own wallet, connect with your Twitter. I'm not sure if they already rolled out to everyone or not. But they were planning to do that, like you have like transfer some tip or pay, subscription on the Twitter using the crypto, and which is a non-custodial, right? So, but the problem with the non-custodial is again like it's a security issue. People don't know how to use their assets and everything. So we need better security measurements. For example, MPC is growing very well as a tech-wise. The second point is that second security aspect of a wallet would be maybe account abstractions and smart contract based wallets, but still like it's very hard for users to understand. So we need to figure out like how do we fix those issues and make sure like users are secure, their assets are non-custodial, and still they can use this big applications without any kind of problems. So still unknown. Like people are figuring. Like there are many wallets are trying to figure this out, like user experience for everyone in Web3. But still, like I see we have many work to do there.
And the status right now, do you guys reach out to those like Web2 companies more, or do they come to you right now? Yeah, just curious about the dynamics.
So we have a huge BD team for Web2 companies. So we go after them, like maybe we talk with them, see okay how we can work together. Maybe it's a small use cases, for example, NFT or simple non-custodial trading, right? So it's we just see like if they are interested, at least if they are interested, like what we can do with them. And if they are interested, maybe internally they talk with internal board, and now like Meta and due to Starbucks and Reddit, they're also very interested. Okay, let's do something, but sometimes they don't know like what to do, and then we kind of brainstorm with them, figure out the key part, and build on a Polygon and push that. Yeah.
Yeah, and I think it has to be like everybody's ready, like in a space, and like not just like one project or one layer is ready, because there's like so many different parts to be integrated. Yeah, maybe Alessio, maybe you can elaborate how do you try to onboard Web2 companies into Web3 in your case?
Yes, for us it was really a big bet that we did early in 2021 when kind of all the NFT and metaverse kind of market was not as hot as it is today, and maybe not even well known. Our largest investor in Hex Trust is a company called Animoca Brands. They're one of the leaders in the, I would say, metaverse, GameFi, Web3 market. And since we started a collaboration with them, we decided to, I would say, craft our offering towards companies that wanted to kind of enter the space and either develop a native Web3 application or kind of starting to, from their Web 2 application and moving into the Web 3. I'll give you an example. There's a lot of movement and dynamics happening in the GameFi space. We understood that there was a need for some products and solutions in the space. So next week we are going to launch a new product. It's been developed as a joint venture between Xtrust and Animoca Brands. It's called Griffin. It is not just a wallet. It is more of a kind of an application that can be embedded in every Web3.
It's a software or?
It's a software, it's an SDK.
Okay,
it's kind of a wallet SDK with embedded KYC and passport and identity. And it can be, it comes natively with certain blockchain-based games. It can be embedded in any Web3 application. And I think really solves the issue of having to kind of bring your users to an application, having to kind of download certain wallets, go and do KYCs on different platforms, and then transfer the assets, write down your keys, etc. So kind of combining what we have, what we're offering on the custody side, and bringing a solution together with Animoca Brands to the Web3 space.
Specifically for gaming, like for games?
It is, yeah, it is specific for gaming, at least for now. But I mean, it is not necessarily limited to gaming. So, for example, we are
start with games, but expand later.
I mean, we're thinking of using it, for example, in DeFi for some kind of permission use cases of DeFi protocols, and we're very excited. I mean, it's going to go live next week, Griffin. So you can check it out.
And Pascal, I know, like, obviously Ledger also work with like fashion companies like Fendi to launch like a very fashionable like a item to tap into like the fashion market. And I also see you guys partner with a lot of different Web2 companies. Yeah, what's your secret in onboarding those Web2 companies?
Yeah, I mean, there are two answers to your question. You know, first, there is a cultural aspect to Ledger that we are developing now. And, you know, these co-brands, the Fendi that you're referring to, but we also had Hublot, and we have a bunch that are coming. Just like, you know, Web3 is going to be part of your everyday life. And so we're just trying to show to people like how to start interacting with the device and how do you finally interact with Web3. How does Web3 comes into your normal cultural life? And, you know, the cultural aspect of what we're doing is extremely strong. You know, people, when they get into crypto, it is meaningful to them. Like, it is not like downloading yet another app on your iPhone. It is something that has much deeper meaning. It is something that defines you almost. And so the cultural aspect is very important. But there is this phenomenon, you know, Alessio just mentioned it, like, you know, it's all about, you know, those NFTs. That was an interesting phenomenon. It's not very old, you know, it started like, you know, a long time ago from a technology perspective, but, you know, from a usability perspective and go-to-market, it's like, what, 2 years, a year and a half? And so that's bringing in the game of Web3 a lot new users, you know, people that didn't really care about the wars between Bitcoin and Ethereum, and now they care more about collectibles, they care more about gaming, they care more about, like, you know, all these experiences. And so Web2 companies, especially brands, and, you know, back on the cultural aspect, sort of can't ignore this cultural phenomenon. And so for a lot of brands, it's a very natural extension of what they're doing. All the brands have tried to go digital in the past 10 years, and now they're trying to go Web3 because it's a very natural extension of what they do. And brands, and especially luxury brands, understand this very well, because if you have a very nice Chanel bag, you know, to have a very nice NFTs that goes with it, I mean, you know, there is something that is very natural, and where they also understand that this NFT could have utility when it comes to the Chanel bag. Like, it could be a tracker, but also it could be a beautiful piece of art. And so what's happening is, you know, brands come to us for support in terms of how they can handle their NFTs, how they can mint them, how they can distribute them, etc. But very quickly, we talk about, like, probably the most important thing for them, which is treasury management. Once a brand decides to go into crypto, they have a real question of treasury management. I mean, those ETH will run on layer 1, layer 2. I mean, those NFTs will run on layer 1 or layer 2, whether they use Solana, Tezos, Polygon, Ethereum. The question is, you know, to get those NFT, you need to have money first, etc. So it's a very interesting conversation, and I think this is how brands and Web2. I mean, I think what you call Web2, what we would call Web2 in your question would be the brands coming to the space. I think this is the entry door, and it's happening very fast too. It's not something that they're thinking about doing like in 10 years. Again, it's a very natural extension of their business. So it's really something that they're doing now. It's happening. And we are about to announce a bunch of partnerships.
Oh, you're about to announce what?
A lot of partnerships, a lot of brands that have signed with us, but not today.
Okay, cool. We'll look forward to that. Yeah, so I think here comes to our last question. It would be like, what would be the, your roadmap for the next couple of years? And I think it also ties to probably where do you see which sector is picking up? Because there are so many sectors in Web3. There's gaming, there's like NFT, metaverse, and obviously DeFi is still going strong. Yeah, so just curious, how would you pick up the trend and integrate to your future roadmap? Yeah, maybe JD. Yeah.
Yep. So to answer your question, like roadmap wise, like we already working on the multiple products. ZK rollups coming very soon. We have SuperNets coming over, where if you are building a games and if you want your own chain, you can build using the SuperNet. We have ZK rollups, so all SuperNets will be converted to ZK rollups in the future as well. So it's kind of a part of the package for the people, for the developers. We have Avail and multiple other products coming off down the line. 3 to 5 years, we are working on multiple research problems called statelessness, where data can be anywhere else, and then blockchain will be very, very abstract. And you can verify the state and the data without downloading all the blockchain itself. So we are working on that. We are also working on how to inbuilt bridging between the multiple chains, like how users would feel like moving from one chain to another chain, moving their assets. When we have multi-chain world. On the industry-wise, as a platform, we don't kind of choose like if you want to go with a gaming NFTs, or if you want to go with a DeFi or DAO or any other industry. Right? We are open to all. As a platform, we kind of help every industry. But what I see right now, gaming NFT leading the whole ecosystem so far, because it's very easy to understand for users. They don't have to worry about what is going on internally in the DeFi protocol, everything. So it's very intuitive for normal Web2 world who doesn't understand, who don't understand Web3 world or anything tech also, right? So for them, like gaming NFTs, I feel like driving the whole ecosystem right now. Many game studios also looking into that nowadays. How do they kind of drive the Web3 ecosystem as well in their games? So there won't be any one particular industry we are targeting. We are kind of everything so far. So, but of course, gaming NFT is a huge industry, and that's why we created this Polygon studio just for that. But now we are expanding it for DeFi as well and multiple other things.
I think because you guys are open, so everybody can build on it. But do you see any where are the builders at right now? Are they more saturated in games or
So currently, gaming, we have seen more people kind of going towards that metaverse for sure, because the hype recently created. DeFi, people want to create DeFi, but the problem is that liquidity, etc., very hard to get by, and also there are very few users on the DeFi side, so still people figuring out what to build on DeFi, how to. So now people also talking with institutions, fintech, Web2 companies to how to kind of migrate them on the DeFi, the bridge between those two worlds. So still there are few people building on those lines, like Web 2.5 kind of a path. So let's see how it pans out.
Cool, yeah. And maybe Alessio, you can give us some more insights about your future roadmap and.
No, I mean I completely agree. I think what's really interesting right now that is happening is that it looks like it's all coming together, right? So in the past we had stable coins, we had SDOs.
I'm just trying to get some alpha out of you guys.
We had DeFi, we had NFTs and everything. But now, I think the alpha, if you want the alpha, I think we will, as all these platforms and solutions are really improving, not just in terms of performance. Now we have better, obviously better networks, but we have better solutions. We have better DeFi protocols, better games and everything. So the user base is growing. There's actually adoption. There are actually, for the first time, probably since we started in the industry, there's actually people that are using the blockchain for something. And it's all coming together very well, of having kind of a decentralized exchange within a game where you can swap a coin for another, and then you can use a bridge and move seamlessly with a decent or good UX already from one chain to another. So if you want the alpha, I would say that we will see CeFi services really kind of losing a little bit of market share when compared to what is kind of being offered in the DeFi space.
Right. And also, like, for regulation-wise, what's happening is that if you go in the DeFi direction, regulation might follow you. Like, you get some notices from the SEC and everything. Gaming other way around, like getting an NFT, like you are pretty secure, and it's kind of their own ecosystem. So it's very easy to experiment there in a crypto also. So there's one more point.
And Pascal, what's coming and what's picking up, except for alpha, you can tell us, the announcement you can tell us now.
No, it's okay. So, you asked me what's coming. I'm looking at the room and I'm like, so guys, what's coming? I don't know. We don't know. And we focus on the core, which is the security platform, and we want to continue on being the best at what we do in terms of endpoint security. And like I said at the beginning, developers.ledger.com, then the market will tell us what's new and what's next. And this is why we've opened the platform, because we've seen in the past that I would dare anyone to say that they saw coming the NFT boosts. Suddenly it picked up and you don't really know how, why, etc., etc. And why was the year of NFT 2021 and not 22 or not 2020? There are many things that are at play that sometimes you don't control, don't understand. There is, the protocol layer. I mean, whether it's layer 1, layer 2, etc. This is. If you try to build a security platform around all these protocols that are all evolving, already that's hard enough as a job. And so being able to predict the future of every usage that then is going to come onto these type of protocols, that's very difficult. What we know is the future is not just going to be finance. I mean, this industry has been focused on finance for a long time. And so that's good and well. And, the future of finance is crypto. But there are many other things that will become crypto. We were talking about those brands and this NFT phenomenon, so the loyalty, health, identity. There are many things that will come, and those things will be secure by your ledger. And so, but we know that we won't develop every app. There's not enough time, not enough developers that we can hire. And so we are counting on you to do this with us.
Okay, cool. Yeah, I think we are right on time. And yes, thanks everyone for coming, and thank you for our amazing panelists.
Thank you.
Yeah, thank you.